welcome. This is the Market Wrap. I'm Agam Vakil. Let's take a look at how markets have done. Consolidation is what we have seen. Sideways movements on expected lines after 2 straight days of very strong gains for the indices. We have seen gains in Infosys, a little bit of a reversal from what we saw yesterday, and gains in Z Entertainment. Tech Mahindra and Reliance Industries is the big stock, along with HCL Tech, or rather Tata Consultancy Services, which is actually holding up the markets. We do have a lot of weakness, especially in SPI, and some weakness returning to some of these auto names, including Eicher Motors, or for that matter, Hero MotoCorp. We have weakness in Larsen & Toubro as well. But what about broader markets? Well, largely evenly poised, but a few more gainers, a few more losers in compared to gainers. We have Deepak Fertilizers advancing by 13%, IDBI Bank, RITES, well, of course, Sharda Cropchem and Diwan Housing Finance also advancing in trade. And on the losing end, we have ITD Cementation, which is down as much as 10%. We have weakness in Ashoka Buildcon. Edelweiss Financial Services down 6% today. India Cement, Sun TV, SJV, and Cox & Kings, all of them looking at significant declines. So on the whole, it's been a quiet day, if I can call it that, considering we've seen mixed moves coming in and consolidation on the benchmark indices. But on that note, let me get in Soumya Sarkar, who's going to talk to us about two stocks here, Reliance Industries and MCX. Sumit, what do you have for us? So
Morgan Stanley came out with the notes for both the companies, and on Reliance Industries, they maintained their overweight rating, but they hiked the target price to 1,469. Now, according to the brokerage, they are confident that a rise in earnings will happen for Reliance Industries on the back of higher refining margins because of the start of IMO 2020. Along with this, lower taxes, cheaper gas feedstock, rising petrochemical margins, and a steady subscriber addition in the telecom business would also de-risk the outlook and boost the earnings. Now, the brokerage is expecting the company's earnings to grow at a CAGR of 17% over FY19 to FY21. On MCX, Morgan Stanley had upgraded its rating to overweight from equal weight and had hiked the target price to 1,260 from 870. Now, the reason behind this upgrade was that the brokerage is seeing that the risk reward is compelling, and that too amid tough market conditions. Now, it sees a strong structural multi-year business trend at MCX on the back of strong cyclical tailwinds to trading volume. So if Morgan Stanley likes MCX on the back of a strong industry positioning, regulation-led structural tailwinds to earnings, asset-led business model, near-term visibility driven by cyclical factors, and attractive valuation, and is expecting the company's earnings to grow at a CAGR of 20% over FY19 to FY22.
Okay, Soumya, thanks for getting us those details. So there you have it. That's the way things are panning out for Reliance Industries and MCX. And also want to address Hexaware Technologies, another one of those stocks which advanced in trade today. And this is after what we have come to know and understand from the management through its analyst meet. Firstly, the management is looking at a 17 to 18% CAGR over the next 5 years. Secondly, the management expects a recovery in the banking and financial sector. Of course, it will continue to focus on automation and cloud, and of course also a focus on transforming client experiences, and these are the 3 pillars that it is going to work around. This is just a re-emphasis on that one. Moreover, the company has also spoken about several of its verticals, but the focus will be in banking and financial, considering 40% of the revenues come from that vertical, and they're expecting that the fact that they're seeing a lot of traction now. Of course, there are still some challenges, some client-specific challenges, and the fact that there is delay in decision-making in terms of new deals coming through. But if you keep those aside, we are looking at some amount of traction, and that's something that the company is looking to build on. And on the back of that, we've had a positive up move as far as Hexaware Technology is concerned. Of course, we continue keep tracking more as far as the stock and the sector goes. But on that note, it's a wrap on the markets, but there's lots more lined up. Stay tuned to Bloomberg Read.